I am a winning and successful trader. I am a consistently profitable trader. I follow my trading plan to the letter and execute it perfectly. I have a solid risk management plan to keep my trading safe. I know exactly the right moment to get in and out of trades. I listen to what the market is telling me. I do not project onto it. I am capable of noticing market signals before anyone else. I increase my profits year over year. My trade setups are successful because I've tested them and I take time to plan and execute properly. I focus all of my attention on the trade in front of me. I am present and relaxed when I am trading. I apply winning strategies. I follow and execute these winning strategies perfectly. I am open and flexible in reading the market. I am always learning, growing, and advancing my trading knowledge. I am always on the lookout to find or create better trading strategies. I win no matter what. If I fail or lose on a trade, I use that as a learning experience so that I can succeed in the end. I am a winning trader. I never rush my trades, but instead I apply a consistent and systematic strategy. Every day in every way, I gain more and more insight into the markets. I keep my emotions in check before, during, and after trading. I am a level-headed winner of a trader. I am an expert at trading and money management. I take the time to do my research whenever necessary, and I execute my trades flawlessly. I refuse to pay attention to outside news, opinions, or strategies that do not align with mine. I am a calm and patient trader, and I never invest in a market when the risk is far too great. I follow my risk management plan and stops. I always record and track my performance to optimize my trading success. I am a skilled and masterful trader. Profitable winning trader is my first, middle, and last name. Day in, day out, I make sure to take care of my mental, emotional, and physical health so that I stay a successful trader.
Consistently profitable trader is my first, middle, and last name. Consistently profitable trader is my first, middle, and last name. That's powerful. Consistently profitable trader. I am a consistently profitable trader. It's my first, middle, and last name. Consistently profitable trader is my first, middle, and last name. Now, when you see all those words, people will think that you are just joking. You're just joking, all right? Like I said, we are not just saying these words and go to sleep. Okay, we are saying these words and we are going to work. We are saying these words and we are getting to work. We are not just saying these words and going to sleep. What these words helps us to do, it keeps us in the right frame of mind. It gives us the inspiration, the motivation, and it keeps us in the right frame of mind. So that when at the point where we are getting to be discouraged or we are getting to be wanting to give up, these words will come up, right? These words will come up at the point where you're trying to want to be tired, be this, that, that. Then you remember that you said these words to yourself, right? One of the affirmation I love here is every day and every way I gain more and more insight into the markets. Every day and every way I gain more and more insight into the market. Can you hear me? Good morning. Good morning. Good morning. Can you hear me? Every day and every way, I gain more and more insights into the market. If you can hear me, please let me see on the chat box. Identify if you can hear me. Every day, I gain more and more insight into the market. Every day, I gain more and more insight into the market. Every day, I gain more and more. Every day, every day. And I told us at the end of each trading day, we are to review the market, right? At the end of each trading day, we are to review the market. And you're doing two things. One, you are studying patterns, all right? Daily review. This is an habit that every day trader should cultivate. If you want to master the markets, you want to become a good trader, every single day you have your daily review. And I said, this is not you reviewing your trades. You're not reviewing the trade you took. That one is apart. What you are doing here is you are reviewing one patterns. You're asking yourself, so this particular day, what pattern did the market print out? That's the first thing you are doing. Number two, insights. You want to learn from the market. The market is the best teacher. The market is the best teacher. The market is the best teacher. So every single day, we are doing a daily review of patterns and insights. Patterns and insight. Everybody type on the chat box pattern and insight. Every single day, pattern and insight every single day without fail, whether you took a trade that day or not. Once the day is closed, pick a particular time, maybe 8 p.m. or 9 p.m., 15 minutes or 30 minutes, pattern, insight, pattern, insight. Everybody on the chat box, pattern, insight, pattern, and insight. So in the affirmation, it says, every day and in every way, I gain more and more insight into the market. Every day and every way, I gain more and more insight into the market. We asked Melkis yesterday, what is the secret? How is he being able to be banking yesterday? He did that much, he did 1K dollars yesterday, right? He did 4K dollars the other day, he did 10K dollars. He's just doing us anyhow there. We asked Melkis, what is this? What are you doing? Guy, tell us the secret. And he said, not to say long story, I practice and I backtest. It's as simple as that. Is Melkis here? I practice and I what? I backtest. The story, he said the story long. The story long, but one important thing I do every day is what? Practice and backtest. You can't do this every day for the next 30 days and your eye will not clear. Your eye will clear. Your eye will what? Will clear. So going into the new month, I'm not playing with anybody. I've told us by the end of this month, every OGs here must have their account funded. If your account is not funded, if you ask me a question, I will not answer you. If you have not funded your account, if you ask me a question, I will not answer you because we are here to make money. We are here to what? To make money, not to talk stories. At least $10, fund it. $10 is around 17K. Go and borrow. Yes, $10 because you know you will not blow it. You will not blow the $10 because you apply proper risk management. 0.01. Start 0.01. Risk $1 per trade. You can't lose 10 times now. If you blow a $10 account, it means that your risk management is not okay yet. You can't lose 10 times. Lose one, lose two, lose three, lose four, lose five, lose six. No now. You can't lose 10 times on a row. It means your risk management is not okay. So start with $10 if you can't afford it yet. From that $10, you can now grow it to make $43 and buy a 1K ProFm. So this is the process before we go to our chart. Let me show you how to scale from your little $10. So you fund $10, right? You fund $10. Then in the first month, you can do it. I know it's possible if you have the skill set. You can grow it and make $43. So you can buy a $1,000 prop account. Okay. Once you have done that, that's your first breakthrough. Once you have done that, that's the first breakthrough. Once you're able to purchase a 1K prop, hold on tight. Hold on tight. From that, you can now start scaling up. Now buy 3K. From the profit you make from 1K, buy 3K, buy 10K. From that 10K, I will show you how to scale up to $1 million. That's my plan currently. In the next 100 days, I would have grew my portfolio to $1 million for myself and my clients because I'm currently trading a $10,000 profit account. So the plan is I will be scaling up. Once I make 10% on my 10K dollars, I will scale up to what? 30K. Once I make 10% on 30K, I scale up to 90K. Once I make 10% on 90K, I scale up to $270,000. At that point in time, the money I make from 270K, I can now buy a 500K account too. And that's $1 million. So in about 6 to 8 months, you can achieve this goal with the proper skill. So with your $10, you start today. In 12 months' time, you are sitting on $1 million account. This is not theory, it's blueprint, it's practical. So please, I beg you, end of this month, if you have been with us for the past 30 days, 60 days, 2 months, 3 months, 6 months, you must fund your account. I'm going to send the link again to register to fund your $10. All right. Um, if you traded yesterday, let me see, signify those that traded yesterday. We gave signals yesterday on the group. We gave signal for UUSD. We gave signal for gold. We gave signal for GJ, right? If you traded yesterday, let me see whether you lost or you made money. Just signify. How was yesterday's trade? We had lessons to learn from yesterday's trade. I had the first trade I took on EU was it is stop loss. The sell I took, but the buy I now took in the new section got into take profit. All right, so yeah, and I also took a trade on GJ, and I'm currently in profits also. That's triggered my profits. So on my own side, I'll be analyzing Euro USD, GJ, and gold. Right. So whilst others give us their own pair to analyze. Okay. Are we together? Nobody traded yesterday. Ah, whether demo or live. Yeah, talk to me now. Talk to me. I need to go to the charts. Who traded yesterday and what's up? How was the trade yesterday? Expose yourself. Expose yourself. Who traded yesterday and how was the trade yesterday? Today we have a news. Okay, we have it's card news we have today. Card news by 1:30. Retail sales. All right. Okay. Good. Who traded yesterday and how was the trade yesterday? Okay, even USD sell but it's stop loss. Okay, no problem. All right, but I gave the buy. I gave the buy setup for USD. Right after stop loss was that's why we have London section and New York section. London section trade it stop loss. Good. New York section give us a buy potential. So you'll have taken advantage of it. So don't just once when your trade is stop loss once, don't relax, don't feel bad. Go back to the chart, check what went wrong. Because definitely when your trade is stop loss, it means you are on the wrong side of the market. So check what went wrong to be on the right side of the market. Don't just go and this guy did that too. Chidex did that. When he hit stop loss, he just closed for the day. No. Even if you won't trade again, even if you won't trade again that day, when you hit stop loss, check what went wrong. Oh, I hit stop loss because I was on the wrong side of the market. I sold when I should be buying. Now, next question. So how will I now, where will I now continue from this buy if peradventure the price comes back again? So when I hit stop loss on EUSD, okay, it took out the supply. I waited patiently for a pullback, drew my Fibonacci retracement, and put my buy limit at 50% and 71%. So let me share my screen. That's how to recover from your loss. So, okay, if you can see my screen, please identify. If you can see my screen, let me know. How to recover from loss. How to what? How to recover. Let me delete everything and start again. This is how to recover from a loss. Okay. Fine. So on Thursday, London section hit our stop loss, right? London section hit our stop loss. So this was where we started selling from, and it hit the stop loss. Let me show you how to be very flexible. Okay. That was my stop loss that got hit. And I now saw that okay, stop loss got hit because this demand zone has been respected, and this demand zone is a daily. This demand zone is from the daily. This demand zone is from the daily. So I have gotten a what break of structure. Look at it very carefully. There's now a break of structure to the upside. Once your stop loss gets hit as a sell, it means that the buyers are in control. It's as simple as that. Once you get stop out in sell, it could be that the buyers are not in control. So what do you now do? Look out for the break of structure that took out your stop loss. Are you with me? The break of structure that took out your stop loss. Take out your supply because that supply zone has been cancelled. Then now do your Fibonacci from the new low to what? The new high. That's what I did. That's what I did. Then I now put my buy limit at two positions. One, at my 50% equilibrium. My first entry was at what? 50% equilibrium. Then my second buy limit was at what? 71%. And you can see that price didn't get to 71%, right? Price didn't get to 71%, but price got to 50%. Sniper entry, look at it. Price got there and it bought throughout. So when you get stop loss, when your stop get hit, you look out for the break of structure of the reverse trend and wait for a pullback. Don't jump in because your sell got hit. Now start buying. No, 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 no. When your sell got hit, calm down. Look out for the break of structure of the buy. Wait for a pullback and put your buy limit at the equilibrium or what or the demand, and that's what happened exactly. Do we see that now? Is that clear? Is that correction clear for EUSD? Do we get the correction for you? So quickly, let's go to today for before this guy leaves us again. So look at what is happening now on EUSD. 7 pips. This is a ranging Asian section. I don't trust this sell. So it could be most likely this I will be taken out if it has not been taken out. So there's going to be so it could be now that it's trying to look for demand zones now to buy because we have taken out Asian low. Because when you have a ranging Asian section, liquidity must be taken out. Okay, so let's take out all this and let's review what we have. So yesterday was what bullish. Yesterday was bullish. We closed yesterday very bullish. We closed yesterday very bullish. Mind you, this daily time frame, we are already sitting on our demand. Can you see? On daily time frame, we are already what? We are already sitting on this demand on daily time frame. You can see that was where the 15 minutes yesterday had confirmation. We are already what on this demand. Okay, so back to 15 minutes. Now all this said that happened, we are going to see a buy now, a massive buy. Okay, but we need to know where and when. We need to know what, where and when. We need to know where and when. Yesterday closed bullish, right? Yesterday closed bullish. So we're going to mark our high and close. Yesterday closed bullish. So we're going to mark our high, and today is Friday already. So we might not really expect much today, but let's just see how today will play out. Good. So this is what we have currently, right? So you can see now that On 15 minutes, we have taken out this change of this previous low. That's a change of trend. Okay, that's a what? Change of trend. It means that we had break of structure here. If we look at this carefully, this is a break of structure, right? Break of structure, break of structure. Higher low, higher high, higher low, higher high. Then this higher low has been taken out currently. That's a what? Change of trend. So if I want to see a sell for today, I would see price come back to my supply here and what? And drop. If I want to see a sell for today, right? If I want to see a sell for today, which I want to believe or think that's what is gonna happen. I want to believe that today's gonna be a sell. It's what I'm saying. Today might be a sell. Okay? But let's watch. Let's watch. So this is my location. If I want to see a sell, my location for sell is going to be what? At this supply zones here. So when price gets there, we wait for confirmation. When price gets to any of this location for USD, we wait for what? For a confirmation. When price gets into any of this location, we wait for a confirmation. Okay. Let me look for a perfect supply. Okay. So this is perfect. Yep. Okay, this has been mitigated. So this is the next one to be mitigated now. Yeah. Supply. Yeah. So this is my supply for your USD. If I want to see a sell, it should not take out. But if it takes out this guy, then opposite is the case. So I'm set for Euro USD for a sell because I've seen a change of trend here, right? And this is my and we sell at demand, we sell at premium, we buy at discounts. So I need to see price to drop to this demand to buy. Do you understand? Euro USD. Is Euro USD clear? Is Euro USD clear? Is Euro USD clear? All right. This is the demand zone here. So if you are selling from that point, you're going to be taking profit from this demand zone. Sell here, take profit for a sell. For Euro USD sell, this is the projection. If it now changes direction, you know what to do. But right now, this is what you are seeing. Okay? Yeah. So right now, this is what we have. Sell, stop loss above. Stop loss is 6 pips. Take profits 1 to 4, which is not bad. 1 to 4 is not bad for a take profit. Okay, if it gets there, good. So we're going to monitor price action as it approaches this. Okay, it's clear. Yeah, it's clear. Good. Don't worry if you are those that are newbies, like goodness, charity. Don't worry, just follow, right? Just be watching us, be observing. Any any jargon, any English you hear, just be penning it out. Right? Just observe and watch. Watch us do our magic. Right? Just watch us do our magic. Observe. So EOUSD is clear. Okay. So as it's dropping like that now, just be watching it. Don't do it. If it drops to this place, it's not your trade. When it drops, you're waiting for what? Pull back. So when it is dropping, it's not your business. So let it drop all it can. It's when it's now retracing, you now drop what your Fibonacci. Okay? Just leave it to be dropping. Leave it, make it a drop. When it's dropping, it's forming break of structure for you. When price is dropping, it's forming what? Break of structure. Once you retrace back, that is your business. If it drops, not your business. Retrace, your business. It drops, not your business. Retrace, your business. Because price will always break structure or change trend every single time. So now we are breaking structure to the downside. All right? We are what? Breaking structure to the downside. Good. So we just wait for retracement and we sell. That's the first signal I'm giving us this morning on EUSD. Let's check DXY so we can juxtapose because DXY will give us a confirmation of what EUSD will do. If DXY is buying, it's game over. Look at our DXY for yesterday. It played out perfectly as we speculated. Sold, right? I told us yesterday that DXY is bearish, right? So now, what is DXY? What is DXY doing this morning? Can you see that DXY is facing the upside? DXY is facing the upside. DXY is DXY is facing the upside, and it's trying to like it's already breaking out of the Asian eye. So what do we do? We mark out our location. Just do your Fibonacci from here to here. So the two locations we're expecting DXY to come back into is 50% and what? 71%. First, the two locations we are expecting DXY to come into is either 50% equilibrium or 71% Fibonacci. All right, to continue this buy, to what? To the upside. Good. So let me do daily previous day candle for DXY2. How did yesterday close for DXY? Yesterday closed very bearish. Very bearish. Very, very. Do we have okay? Just a little low, a little weak. Yesterday closed very bearish. So what do? We will mark our what? Our low and close. Mark our low and close and extend to what the next day. So it can be a guide for us to know how price will move. Low and close, 15 minutes. So let's monitor. Let's monitor. Let's monitor. Let's monitor. Okay, my guys on the fly already. So this, if I want to see a buy, I don't want price to come and start trading below this guy. No, no, no. I don't want to see this. Once I see this, that means we have changed structure. But so long as we are trading above previous day low and close, we are buyers. That's the idea. So long as we are trading above previous day low and close, forming a bullish structure. The question is, what structure are we forming above this guy? Now, the bullish structure just want to start forming now. Okay? The bullish structure just want to start forming. This will be the first break of structure. This one here. This will be the first break of structure. So we have to be patient. DXY is New York section. DXY is in New York. So London usually give us the manipulation. So let's be patient. Once this breaks out, okay, DXY, once this breaks out, we see a pullback. If he wants to buy, we continue. Okay, so we monitor. We do what? We monitor. So I think we are good for DXY too. DXY is bullish. That's the conclusion. At the current state of DXY structure is what is printing out bullish structure. Is that clear? Euro card. Okay, let's go. Let's go. Let's go. Let's go. Euro card. 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 Let's go. The same thing. Euro card and Euro USD. I've told. Let's go back to daily. Euro card and Euro USD plays this. Okay. Okay. Let's Euro card and Euro USD plays what? The same role. Look at the demand. This demand zone here is what they came back to use. Okay. Euro card and Euro USD plays the same liquidity demand. So let's come to 10 minutes. How did yesterday play out? How did yesterday play out? How did yesterday play out? Let's take off this. How did yesterday play out for Eurocard? Thursday. This Asian section, right? You can see this one. This is the perfect example of Asian low taken into demand. This is a perfect example of the Asian low because it is a ranging Asian section now. It is ranging. So it took out this liquidity to use the demand at the left. It took out this liquidity to use the demand here. Okay, it means okay, yeah, good. This is the demand here. It took out liquidity to use this demand. So if you don't know what to do with buy limits, wait for confirmation. Wait for a bullish candle to form. Okay, but that's too much. This is too much. First move, you miss the first move. Don't panic. If you miss this first move after taking liquidity, you miss this first. Although on 5 minutes you see a clear picture, it's still too much. 5 minutes did not give us chance. You can see 5 minutes did not give us the chance. It was too high. You can't buy from here. You can't buy from here. If a candle like this, don't buy. Oh, it's too much. What you do is wait for a pullback. Just draw your Fibonacci. Once a candlestick close that big, don't worry yourself. Draw a fib from where? From the low to where it start retracing. And if you not catch the retracement, just leave it. So Eurocard did not give us 50%. So you'll have missed Eurocard's trade. Sincerely. You'll have missed, and it was a very good buy. So if you miss it from this demand zone, you have missed it. That's yesterday. Okay? Like that. It happens. It happens. Sometimes you miss trades and don't beat yourself. Don't beat yourself. So Eurocard yesterday was a very strong buy, and we saw how it played out. We studied the pattern. It took out Asian low into demand and bought straight up. Now we now know that because we are already in the premium, we have bought. There needs to be a pullback. Okay, there needs to be a what? A pullback. But we won't just enter anywhere to sell. So where are we selling from? Where are we selling from? We have to mark our locations. Very important. So what do we do? Mark our Asian high, Asian low. Asian high, Asian low. And we expect liquidity to be taken out. Okay? we expect liquidity. So these are our what liquidity above the Asian high. So to be very safe, allow price to first take out liquidity before you wait for confirmation. Okay, to be very very safe, allow price to what take out liquidities, Asian high liquidity, previous high liquidity. Once that's taken, like what happened yesterday. Okay, it took out this liquidity, then it bought. It took out Asian low liquidity. It took out previous lows liquidity. Look at this demand zone because of who will buy here. Some guys will what we buy here this demand, and they stopped out. You can see some guys will now come and say, okay, I will now buy here again too, and they were still stopped out. So price market likes to take out liquidity to buy. So for a sell too now, Asian high is a liquidity trap. Previous high too. So we might see something like this. Palm, then palm, now sell. And there is a card news in the afternoon by 1:30. There's a card news in the afternoon by 1:30. Expect what? Liquidity. So this is my card. I want to wait for confirmation, which is what? Liquidity zones to be taken out. So I won't put my supply here. It's risky. I won't put my supply here because price is likely to take it out. So I'm going to wait. I will monitor euro every 30 minutes or 1 hour. Do you hear what I said? Price will likely take out this Asian high, this guy they sell. I don't know. But let's just monitor. So I'm going to monitor my price every 1 hour or 30 minutes, Euro card, to see. Okay, I think we have a supply zone above on 1 hour. Okay, good. We have a supply zone here. 30 minutes. Okay, so I'll just wait for supply zone. I'll just wait for New York section because London might give you manipulation. London might give us what? So I'll wait for Euro card. Advice: wait for Euro card 1:30. Wait for Euro card 1:30 so you can milk it well. Euro card, wait for 1:30 news because there'll be manipulation. Euro card, wait for what? 1:30 news, right? Because there's a high chance that London section will manipulate. Are you together? Okay, done. Euro card is done. Euros is done. I've done GJ. Have I done GJ? Okay, DJ2 is done. I'm still in profit on GJ. I'm still in profits. Okay. So for GJ, I entered here. This is my buy yesterday, so I'm still in profit. So I'm just waiting for if I see break of structure, I scale in. My take profit is this high here. Okay. My take profit is this high. So I'm holding this trade. I'm holding GJ. I'm what? I'm holding GJ. I'm holding GJ, guys. Right? To the promised land. Holding GJ to the promised land. Okay, what other instruments are we analyzing? Gold. Okay, this is the gold analysis I did. It's gonna buy from me, and it's already doing that already. This is gold. It's already above my. It respected this. I did this analysis yesterday night while I was before I slept, and it has respected it. Consider it's if I actually on this trade, it have taken me at a stop loss, because see this guy, see this gold. It came down and you now started buying. So if you are trading gold, your stop loss should be generous. This 26 stop loss. So if that had been at say this is too much, 34. So something like 40 pips on gold will have done for this trade. But that's where I put my stop loss before. If that's where I entered the trade, I'll have been stopped out. So if you're trading gold, you have to be ready, because gold will gold you. The best is now, okay, I'm going to wait for this change of trend. So how do I enter this now during London section? Is there a change of trend? Yes. Is there a change of trend? Yes. This change of trend, this new low, this new high. Let me see. This is my first demand, and this is the break of structure. So I have a break of structure here already on gold. I have a break of structure here. So I wait for London section, okay, and a pullback. All right. So this liquidity was used. That liquidity was used, and this demand zone. So this is the demand zone that was responsible for the trade, for the buy currently. The demand zone, this demand zone was what was for this buy we are seeing currently. Tapped into the what? The middle line. Okay? This is the demand zone. So let London open. Let London open and we wait for what? A pullback. Because this is good now. It's gonna buy up here. It's gonna take out this eye, take out this previous New York eye into the next supply above. That's what I'm perceiving for gold. So we wait. Okay? We wait. We can't buy now. You won't try gold. The first buy will have been at this demand. That's the first buy. So if you miss that, wait for what? The pullback, right? Then we continue. All right. So we are monitoring gold. I'm monitoring. I already have my trade running on GJ. I'm monitoring Euro USD. The Euro card is in the afternoon. Euro card is in the afternoon. Afternoon Euro card. Okay. So London section gold. London section EU. Okay. That's my trade for today. Today is what? 25th October. All right. So that's my trade. London section Euro USD. London section gold. London section Euro USD. London section gold. So I stay on my chart and monitor every 15 minutes. In gold, you didn't check the daily candle. Okay, let's check daily candle on gold. Let's check let's check daily candle on gold. So let me even delete everything self. Let me delete everything so it won't look messy. So on gold, let's check delete candle. Okay. So let's do previous day first before we come to today. Look at previous day. Previous day was what? Bearish. That's Wednesday. Wednesday was bearish, Abi. So let's now check how Thursday played out to show that this thing works in every every chart. It's not just one chart. So long as that chart have a that chart have candle, right? So you can see that we didn't even come close to this Thursday. Okay, yeah. So we are trading above yesterday. So look at our opportunity for entry during Asian section. This is the first opportunity, break of structure. We are already above previous day, right? Break of structure, Fibonacci, that's our first opportunity for gold. Look at the buy at what? 71%. Did they get there? Yes. That's the first buy opportunity that happened on gold. First buy. Then London bought up until it got to the 71%. That sell you saw happen during New York. It was the 71% of this sell range. Let me show you. From your high to your low. The sell we saw yesterday was exactly the supply in the 71%. That was the sell we had. And I drew it for us yesterday before it got there. The supply zones. So how the gold play yesterday? Gold had it bought from Asian into London at supply zone 71%. It sold. Is that clear? So that's yesterday. Now let's come to today. So yesterday closed what? Very how did yesterday close? Yesterday closed bullish, right? Yesterday closed bullish. I and close, I and close, I and close, I and close, I and close. I love this. I love this. I love this. I love this. Good. Next, Asian high, Asian low. Perfect. This is what we have now, right? And we said that we already have the buy has already started here. Okay, the buy has started here as here already. So Asian range was trending to the downside. We now have a change of what trend. So we are expecting London for a what buy. Okay, that's still the same thing. So once we break out of this previous day candle again, the buy is confirmed totally for the day. Okay, but if you are still trading below this previous day high, then sell. So two ways now, two ways for this chart, two ways. This is the lower high, lower low, internal structure, lower high, lower low. So if you want to see a sell, when price gets here, we have to see a bearish structure form. That's the first setup. For us to see a sell, when price gets to the previous day high, we must see a direction and what a sell. For us to see a buy for the day, then price should break out of previous day and what continue buying. Is that clear? That's the two scenarios. I'll come again. For us to have a sell, when price gets to your previous day location, we want to see a what? A bearish structure. Okay? Selling for the day. For a buy day, price breaks out of this and give us bullish structure for the day. That's the only two things that can happen on gold. Is that clear? Is that clear? All right. Yes, thank you. It's clear. All right. So yeah. So let's go and study. Let's go and study. Observe your charts. Everything is I've given you everything you need, right? So it's either we are breaking structure or we are changing trend. So let me just end with that. Let me end with this. Don't complicate matters, right? When you come to your charts, two things will happen. Are we breaking structures? In this case, are we breaking structures? That's upside, right? Or downside? Are we breaking structure? You're asking yourself, okay? Or are we changing trend? That means we saw that we are selling before. All of a sudden, you saw this happen, pam. Once you see that, you expect price to come back to your demand and buy. So this is change of trend. So market will always print out these moves for you. You have to be very, very, very observant and watch. What is market doing? Breaking structure or changing trend? That's the only two thing. There's no other thing again. Please, we are either breaking structure. I'm closing with this. We are either breaking structures or what? Changing trend. That's all. BOSCHOT. So your job is now to master. So the more you practice and ask yourself, what are you currently doing? Breaking structure or changing trend? What are you currently doing? Breaking structure or changing trend? If you can answer these questions every time, you get used to it. So On come to your chart now and ask. This is so clear of 15 minutes that we are changing trend. Look at it. So here, look at the structure here. We have been buying, Abby, all the way here, buying, buying. What do we see here? Change of trend, right? So clear. Then we came back into what the let's see the supply and what we sold. Now, what you now do is to be safe, just your mark the structure. This your high, okay, and what's your low. So we are dealing with what internal now. Everything here is what internal. Everything here is internal. And if you draw your Fibonacci from here, you know where your 50% is. You know where to start. You know where to buy and where to sell. Okay? This is my 50% fib. It means that I have no business selling when I'm below. I have no business selling when I am below equilibrium. Everything under here is buy. Let me put it out very widely. Everything under here is opportunity to what? To buy. Okay? Why everything and anything above is opportunity to what? To sell. Yeah. Is that clear? So now we are below equilibrium. That's why I said this guy now will have the chance to buy into this because we still have more space above to sell. This liquidity. Market gold loves to take out liquidity. Gold gold finds it's what's the word now? It finds pleasure in taking out liquidity. It finds pleasure in taking out liquidity. So what I'm sensing for gold is going to take out liquidity into the supply. That's where I'm looking at this liquidity sweep. Yeah, that's why I said I'm seeing gold buying into the premium zone, okay, and maybe now drop eventually because we have to buy here and sell here. Can you see? Can you see now? This is a very clear picture of what I'm talking about. Because anything under 50% equilibrium is opportunity to buy, not sell. Anything below 50% is opportunity to buy. So if you are saying sell, just just hands off until it comes to a demand, you strike. If you are saying buy opportunity at premium, don't do anything until it comes to the supply, you sell. So that's why I said on this gold, I'm waiting for price to come into this demand to buy. If you don't come there buy, it comes here again to buy or anywhere we are still buying on that unless it now wants to come down. But I'm observing, okay, we have moved from this sell into this buy, sell. You can see that we are just jumping around there because price will want to take out this liquidity to this supply to sell properly. But we are going to observe. Your job is just to what? Mark out your demand zones. As price is printing out for you, mark out your demand zones. Okay? So this is my closest demand. Let me go to okay, let me just do it from the supply from the Asian good. That's my closest demand I have. The closest demand I have. The recent structure. Perfect. 71%. Perfect. Okay? Perfect. And yeah, that's it. Okay, so that's what we have, guys. That is what we have. So any other thing below this guy, liquidity, this under liquidity. So just observe. If you are scared for buy limits, wait for a what? Confirmation. If you are scared to take a buy limit, wait for a bullish candle confirmation before you buy. When price gets to your location, you wait for a candlestick pattern to form to buy. Because most times you set buy limits, price just takes you out and takes you out to stop loss. So if you are scared of buy limits, wait for a bullish candle confirmation to buy. As simple as that. No stress, no stress. No, gold we sell. No, gold and DXY, they don't go the same way. Oh. When gold buys, DXY buys. Sometimes gold will not sell because DXY is bullish. Oh. If DXY is bullish, gold also sometimes becomes bullish. Ah, lie. Oh. It's not because you study gold very well. When DXY is buying, gold too is buying. Look at the chart now. Has gold been buying or selling for the past? Is this buy or sell? Gold has been buying now. Look at from October 10th up until what? 24. Look at DXY. Look at DXY. Look at DXY. Is he buying or selling? Mr. Idris, answer me. Is DXY buying or selling? Look at this trend. Is he buying or selling? Buying. Look at gold. Is gold buying or selling? Buying. So gold and DXY, they know the that's the only. But Euro USD here, if Euro USD is selling, DXY is buying. If Euro USD is buying, DXY is selling. It works perfectly for Euro USD. But for gold, nah. Gold is a different species. If you study it, you see it. You see that what I'm saying is true. Look at now. This has been buying, has been bullish. Gold too has been what? Bullish all the while. It's just recently it started giving us. This is the first bearish he gave us. That was yesterday, Wednesday. Do you understand? So DXY and gold, they don't correlate. Oh. Let's see what 4 hours is even saying. 4 hours. Okay. Liquidity, demand. Okay, this liquidity here again. Okay. So probably this liquidity will be taken into this demand for a buy. But let's just observe. Let's observe. Okay, let's observe. This liquidity here, all right, and these are demand zones below for this buy. So as yeah, so question. Okay, silver. Silver, quickly, silver. Silver will be selling now. We said silver will sell now. Silver is selling now. Silver is selling. Silver has to come and feel this demand. So let's look at silver. The sale started here. You can see this is Wednesday, Abi. The sale started there, supply. That was the confirmation. The first Wednesday was the distribution phase. Monday, Tuesday, right? Gave the accumulation. So Wednesday, distribution. Return back. I'm very sure this is a 50% equilibrium from this to this. You can see. I'm very sure. Look at. So it's the same thing across board. Once you see a break of structure after a change of trend, what do? You draw out your Fibonacci for retracement. Pull back. Every single time you see a break of structure, keep for what? For pullback. You set your location in the two areas, which is equilibrium and 71%. Those are the two places you can only sell from. Only. Once you see a break of structure and you join it, the only two places you sell from for a sell is what? Equilibrium and what? 71. And this guy gladly gave a confirmation at equilibrium. And that's yesterday, Thursday. You sold. Still selling. See it our destination now. We said this already now. It's coming here. And we talk about bank level, Abi. Bank level to bank level. Let's see where this guy started selling from. You're not surprised. 35. You're not surprised. Okay. Bank level to bank level. It got to this level. It came up. So we are touching these levels. This bank level next. This bank level less. So what's the middle? What's the mid? Let's do the mid of this guy so you can take advantage of the 34.5 is going to be the mid. Okay. Point 0.5. Point 0.5 is the mid. Point 0.5 is the mid. So this expo, like this is cheat code. This bank level is cheat code. Just once it's trading below bank level, just go and sleep. Once we are selling below this level, we are coming here. Once we retrace, sell next. Once it's leaving here now, it's coming here. Once it's leaving all this place, See express. If you are trading silver, this an express. Once you get a confirmation for a sell, you can hold to this place. I will take partials. So where is the next sell? Yeah, because now it's sell. We are selling already. The direction has been clear. So you only just to mark out the structure. Just mark out your structure, your sell structure. This is your lower high. This is your lower high. Okay, and this is your lower low. Just mark out structure and wait for pullback. New York is always the game. The New York is always the game changer. What do they call it? So this is where we are, right? What's the range from lower high to what lower low? You can see we are already touching what 50%, but there might be a what manipulation during London. So just set your limit orders and wait. Set your limit or set your location rather. Set your location and wait. You can see that our extension is aligning with this next bank level. With this supply here, that's our take profits. Once that sell happens, our take profit is this demand zone, which aligns with our Fibonacci extension. So let me take off this. So this is my trade for silver. Asian high, Asian low, Asian high, Asian high, and what Asian low. Okay. We don't trade silver during London, right? We trade silver during New York. So just wait. Silver is a sell. Silver is a sell. Silver is a sell. But you need to know where you are selling from and when you are entering the sell. Silver is a what? Is a sell. Okay, because we need to fill up all the orders, all this demand. Is that clear? Are we good to go forward? Are we good to go? It's 8:16 already. So let's check what our different guys are doing. So what is GJ doing? GJ is buying. What is EUSD doing? What is EUSD doing? Is going back to our location. You can see it's going back to our location. All right. I'm patient. I'm patient. I'm patient. I'm patient. I am patient. I am patient. I will probably also wait for a confirmation, a bearish candlestick pattern here. Once price enters my supply here, I wait for what? A bearish momentum candlestick. All right, to pick the sell. What is Euro card? What is Euro card doing? You said they are going to wait till Gabi, but it's still the same structure we're having. Still the same structure. It's supplies. All right. Wait for a bearish momentum, because this guy promises to sell well. Eurocard promises to have a sell for today. With the structure I'm seeing, I'm not saying I'm a magician, but with the structure I'm seeing, look at clean demand zones waiting for us. Okay, with the structure I'm seeing, is that clear, guys? Have I helped? You come and check your chat. What's happening today? Can we call it today? Can we call it a day, guys? Any more question? Okay, no response. So I assume that there's no more questions. So, quick announcements. Um, for the mentorship, we are starting November 1st. So if you have not locked in your sports, do so, do so, do so, do so. There are lots to share. I can't share everything here, right? So if you're not in the mentorship yet, join the mentorship before it's too late. Before it's too late. Next month, we are going to start our signal group, right? So we are still looking at the price. Maybe we'll make it $20 every month or $15. We are still trying to conclude on the price. Okay. And it's only those that are in the mentorship that will have that will take advantage of the signal. Okay. Yeah. So any more questions, drop on the group, send me a DM, right? And we're good to go. So have a lovely guest. Have a lovely day, guys. Guys, have a lovely